please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
ICICI first trade is 4% higher, 4.4% higher.
We will still continue to hold on to our view that we can get a very low double-digit earnings growth in FY18.
Number of options that we are looking with the government, and while some of them we will do internally and optimize our cost.
Walmart and Flipkart all set to sign a definitive agreement giving the US retail giant majority control of India's homegrown e-commerce unicorn.
For Jubilant Food, the same-store sales figure is out and it's a 6-year high, 26.5%.
Midcap Tech found buyers in the afternoon. So your first source, Hexaware, NIIT Tech, these stocks have gained between 3.5%, depending on which one you're looking at. Some interesting buying traction on the likes of an Indian bank, South Indian Bank, and from the NBFC space, it's probably Gru Finance. That was the stock of the afternoon with a 7% up move coming in on Gru. So very, very solid out there.
Flat day of trade on Dalal Street as far as the indices are concerned, but financials outperform and propel the Nifty Bank. Nifty mid-cap underperforms slightly and is the only major index to end in the red.
The Nifty Bank Index ends the day close to 1% in green, propelled by public sector banks as bond prices rally, following comments from the Finance Ministry officials who say that RBI will buy more bonds in the open market this year.
ICICI Bank shares surge over 6% after the bank recognizes most of its stressed assets as NPAs. Brokerages remain upbeat on the stock.
The Power Ministry officials say meeting with RBI has been postponed after the central bank rejects request to exempt sector from stringent bad loan norms. Our stocks decline in trade today.
Jubilant Food cools off from record highs after reporting strong fourth quarter numbers. Godrej Consumer ended the day close to 2% in the trade, 2% higher in trade after healthy guidance from the company's management. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back, the show where we tell you about all the ups and downs and the moods of 8 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Surabhi Upadhyay. Hi Surabhi.
Hi Lata. Well, yes, very interesting session today. It was all about select stocks and a couple of them from the banking universe. We're going to be talking about that and, of course, all the other trends. We'll also have our experts join in to answer your stock questions. And joining in to answer those queries today are IIFL Sanjeev Bhasin as well as technical expert Ashwini Gujral. Thank you both for joining in on the show. But before we get started, Lata, your thoughts on the day. It was a lot about individual stocks and earnings reactions playing through today, right?
Oh, yes, but weren't there macro themes?
Macro
for
themes
instance,
as well, yeah.
you know, the global markets were not really helping, especially in the second half of the day, with everyone waiting to know what President Trump would do about the nuclear deal with Iran. So the quietness in the European markets kind of cast its shadows on India as well. But what made India an outlier were, as you said in the headlines, the banks, and the bond rally, of course, helped, but much more so, it was an ICICI outperformance that helped the Nifty Bank and therefore the banking portion. Actually, you remove ICICI. ICICI contributed 277 points to Nifty Bank, which ultimately rose only 238 points. So without the ICICI contribution, it would have been in the red. And likewise, it contributed about 32 points to Sensex, to the Nifty. The Nifty ended only 2 points higher. So without ICICI, it would have been minus 30. It was really an ICICI and a bank day. So I would argue that the Nifty is actually finding resistance over here, and we will have to wait for further news or mood to pull up the index. It seemed rangy to me.
Okay.
But you were speaking of a lot of specific stock performance.
Yes, absolutely. So I'll just take that point forward on the banks, because it clearly seemed to be a day when there was buying action concentrated on corporate-facing banks. Lenders were lending to large corporate projects. So ICICI Bank obviously was the stock of the day, as Lata pointed out. If you take a look at the rest of the pack, very mixed trends, because SBI found takers, Axis Bank found takers, but the other marquee names, the market's darlings, the Kotak Mahindra Bank, IndusInd Bank, Yes Bank, the HDFC twins. These were stocks that were actually on the lower side of the screen. So you can see how mixed the color was within the banking universe as well. If we move forward, what else worked in the market? Interestingly, we had oil marketing companies gaining, so HPCL, IOC, BPCL. Towards the end, most of these stocks ended at the high point of the day, with HPCL up almost 3.5%. Key losers in trade included names like M&M, L&T, Infosys, so there was some pressure on IT once again visible, despite the fact that the rupee was quite weak, so that's sentiment positive. I'll talk about some of the F&O losers. PC Jeweler, it's out of F&O ban, and today was a down day for that stock, so the yo-yo continued. And today we're talking about a 14-15% down move on PC. Suzlon, United Spirits, these were some of the other stocks on the weaker side. There were a fair number of gainers as well. BEML stands out that it's because of perhaps the Karnataka play in the market right now. The stake sale was held up by the current state government, so if the BJP comes in, maybe the traders were latching onto that. SRF, Indian Bank, these were some of the other names. Concor, NIIT Tech, Hexaware, the mid-cap tech rally was back in the afternoon. And the stock that really stood out for me towards the end was Interglobe Aviation. It ended at the day's high, back to 1200. I think the question tomorrow is going to be whether the worst of the Indigo correction is over or not, Lata.
Well, that also is a bit of a crude play.
Yes.
I mean, Indigo has its own problems. But it was a bit of a hill and valley as far as crude also was concerned. Early morning, we started north of 76, and then it came south of 76 substantially. Dollar index started almost at 93, and then fell a little closer to 92.5. The rupee went to 65, 67.30, and then came closer to 67. So there were all these influences also making for a choppy day. But let's ask our experts what they have made of what looked like a ranged day for us. First, the technical expert, Ashwini. Well, Nifty ended flat, moved in a range. What would you say? Is it still a buy on dips Nifty?
See, today we don't get a clear picture because the banks skewed the Nifty. If you take ICICI Bank out, the Nifty was probably down 40 points. So this is not that sort of market where across the board buying was seen. Even, the exporters didn't really perform. So it was basically 2 or 3 banks. Even within banks, retail banks came off, corporate banks were higher. Now every day ICICI Bank cannot go up. So my sense is possibly we are still kind of ranging, because if crude continues to shoot higher, something or the other will tend to give way. But definitely today's action on the Nifty is not positive. Even ICICI Bank came off the highs. So while everything is in an uptrend, you may not have a clean run from here.
Okay, well, on that note, let's move to the second headline of the day. Bank stocks rallied for the second straight session today. The Nifty Bank was up close to 1%, and leadership came in entirely from ICICI Bank. Public sector bank stocks were also higher, and that's thanks to the fact that bond prices rallied following comments from certain finance ministry officials who believe that the RBI is going to be buying more bonds in the open market throughout this year. Lata, just your sense on what this might mean, that OMO reaction that we got on Monday, whether there is more upstream or steam left in the bond rally now because of this.
Well, maybe not immediately, we don't know, but clearly the market latched on to a very positive trend that perhaps the government official was pointing out too. And we had a lot of economists giving us the math. What did the officials say? That RBI will conduct more open market operations this year, and it will do that to cool yields and smooth government borrowing program. I don't think the Reserve Bank will agree with the second, but I don't think they can disagree with the math. Now, the math is that every year, Indians on an average are withdrawing about 20,000 crores from the banking system. Now, you can't get this number, you can't get a steady number because last year was post-demo, so we withdrew more money. The year before, withdrawal was less because obviously the notes were demonetized. But if you take a 5-year average, it works to about 20,000, 30,000 crore a month. Some months is 1 lakh. Some months you don't withdraw at all. Election months you withdraw a great deal. Diwali month you withdraw a great deal. But totally India is expected to withdraw about 2.5 to 2.7 lakh crore. Now India started with a surplus of 1.7 lakh crore. The banks have this money and they give it to RBI on a daily basis in the reverse repo window. So you subtract from 2.7 lakh crore, 1.7 lakh crore surplus, then a deficit of 1 lakh crore will be there in the system through the year because Indians are withdrawing so much. Some of it can be also met when the RBI buys dollars. But that is what it did last year. It bought a lot of dollars because there was a lot of FPI money coming in both in equity and in bond market. This year, both have been negative. So let us assume the BOP will be zero. You're neither buying too much nor selling too much. In which case, how will you put that 1 lakh crore? You will have to buy bonds. So this was the arithmetic that was doing the rounds in the market, that in all probability it's 1 lakh crore. If it's a time when, the RBI is also forced to sell dollars to, cool the depreciation of the rupee, then it will buy even more than 1 lakh crore rupees. This math pushed the bond prices up and pushed the bond yields down. But the disadvantaged guy was the Nifty Bank.
Oh, yes, absolutely. Well, in fact, let's take that forward. The query is on Nifty Bank. We've got Ashwini joining in. Ashwini, just your thoughts on what to expect from here on, because today was a very narrow move led primarily by ICICI Bank.
See, Nifty Bank has started to outperform with this move. But should you buy it tomorrow morning at the highs? I think on declines, on any sort of dip, 100-point, early morning gap down, etc., it should be bought, because last 2 or 3 sessions it's gained, I think, about 500 odd points. So it is outperforming, but buy on dip.
Okay. Well, now we have a query coming in from Ashwini Kumar. He's tweeted to us a question on State Bank of India. He has 5,000 shares of the company, purchased at 298 rupees. He has been holding the stock for 6 months now, wants to know if he should hold or sell. Now, Sanjeev, this would be my question as well. Axis Bank rose 10% after the results. ICICI Bank rose 8% after the results. Now, when SBI comes, will it rise? And therefore, this gentleman who has bought it at 298, should he keep the faith?
Yeah, hi. So, well, Lata, yesterday also, if you saw numbers from a smaller bank, Vijaya Bank, that is also one of the smaller corporate lenders, and I thought the numbers were fairly in line, where net interest income was, they still, after provisioning, have still managed to come out with numbers better than expected. And if that is the, way forward, then State Bank definitely should be reporting numbers much better than what the street is expecting. You must take into account that it has almost a 20 lakh crore lending book, and they have already implied that 2% divergence will be the key going forward. A large part of the provisioning may have been done, so I think the numbers may actually surprise and you may see a rally. But the undertone remains that corporate banks will be under slight bit of pressure. However, the caveat here is that bond yields, like you pointed out, and secondly, the other icing would be how fast government can recapitalize the banks, which is on the anvil. So yes, I would expect maybe by the end of the year, at least a retest of 290 is on the cards on State Bank.
Okay, all right. That's a call on SBI. Well, we're sticking with banks because the third headline is also on a large bank. ICICI Bank shares were surging after posting fourth quarter numbers last evening. The shares were up almost 7% in trade after the bank recognized most of the stressed assets as NPAs. Brokerages remain quite upbeat on the stock. A lot of them actually came out with buy ratings and also increased their target price estimates higher. In fact, let's listen in to Chanda Kochar, MD and CEO of the bank, on the company's guidance going forward.
We will also focus on recoveries and resolutions, and through that, by March 2020, we target to bring down the net NPA ratio to below 1.5%. We will also focus on increasing our provision cover ratio, and we target to take it to over 70% by March 2020.
Okay, well, Sanjeev, we almost had a caller but couldn't connect, so I'll read out what he gave us as a SMS. His name is SP Raju, and he has ICICI Bank shares. He's been holding it for 6 months. He bought it at 204 rupees. Do we have him? No, we don't. Okay, sorry. Sanjeev, I hope he's listening. 204 is the price, buy price. He bought 500 shares. Should he hold or sell?
No, definitely a hold. I think that 260, 265 has become the base. And Lata, if you took out the other businesses, ICICI trades at just one-time price to book. It is one of the largest corporate lenders on the private side. And the book is changing very, very dramatically. I think if you heard Mrs. Chanda Kochar, she said that the worst assets, that is power, steel, and some of the other commodities. Now from 14% that's down to 10% of the book, and the retail book is growing extremely strong. Secondly, now the new caveat is that they've done a kitchen and sink quarter, and most of the NPAs or asset quality would be behind. I would say this is a very strong candidate as private capex expands and you see working capital needs. ICICI will be the biggest beneficiary of that. Notwithstanding, a change of guard would again give more confidence to a lot of shareholders after this unfortunate rhetoric which has been there. So I would say a definite hold and an accumulate on any declines.
Okay, so that's a thumbs up to corporate lenders from Sanjeev after SBI likes ICICI Bank as well. Ashwini, let's get your thoughts in. If someone is willing to play this trading rally, do you think it will last? And what are the levels on ICICI Bank?
See, for the first time, it's crossed the 200-day moving average with very heavy volume, with very good news. Now again, news flow matters. If things start to improve and, next quarter is also a good quarter, etc., then you could get 335, 340. Till now it was short covering, either the CEO problems or the bad results or the NPAs. Now that's out of the picture. Now incremental buying will need incremental good news.
Okay, and we will have to wait to see whether that comes or not in the next quarter. Thank you very much, gentlemen, but don't go anywhere. Stay on. There are more viewers joining us with more questions, and of course we are coming back with the other two headlines from the markets in a minute after this break.
Welcome back. You're still with us on Markets Today Talk Back. Well, we are done with three headlines. Let's move to the fourth one now. Power stocks saw a bit of a decline today. This on the back of the meeting between RBI and Power Ministry officials being postponed. RBI has rejected Power Ministry's request to exempt the sector from stringent bad loan norms. In fact, let's now listen in to the management of Tata Power on how they plan to reduce their debt pile and what their take is with respect to interest in buying some of the stressed power assets.
We are about 48,000. And we expect that with the deleveraging that we are doing, especially selling of the non-core assets and some of the other receivables that we are expecting from our investment, we should be in the range of about 40 to 42,000 crores.
Okay, so well, Tata Power is not the one really worried about the Reserve Bank not giving any concessions to the Power Ministry. But we caught up with two people who would be in the know. S.S. Mundra, former Deputy Governor of the Reserve Bank of India, and Ashok Khurana, the Director General of the Association of Power Producers, on the same issue, on many power companies likely to land in the NCLT, the Insolvency Court, because of the Reserve Bank's bad loan rules.
There are several kind of units which are sitting into it. I don't see a possibility, a kind of a common dispensation which can become applicable to all. So my view is that within that framework of that circular, the only possibility which can be explored and should be explored without, compromising on anything else, whether it is classification, whether it is the provisioning, but moving them to NCLT is something which a structure can be created where it may not be, it may not be required immediately.
Unless the average PLF touches about 72%, which gives you a 5 to 6 years of lag period to touch 85 to 90%, there should not be funding of new capacity. But there are projects being funded at 9 crore a megawatt also. So my idea is, unless the bank comes up with the actions on all the fronts, then only situation can be evolved, and it has to be joint effort. The haircut could go as high from 35 to 80%. For gas assets, it may be 90%, but they are completely useless without the fuel and the capacity of purchaser to buy.
Okay, well, those were the experts we spoke with. Now we have some queries. Satya Prasad has sent us a message on Reliance Power. He has 100 shares, bought them at a price of 52 rupees. He's been holding for 3 months, and he wants to know whether there's any point holding further. Okay, Reliance Power. Sanjeev, what would you advise him?
Yeah, so a lot of the pain is already in the price. The company has, it has almost 7,500 megawatt of power. Given against that, they have a debt about 17,000 crore, and there has been no problem in servicing. The only caveat is that, you know, it has been a constant laggard given the circumstances. I think this SPV creation would be a, you know, strong, it should send a strong message by the government of India that all the assets, you know, will not become NCLT and there will be some provisioning. And you know, merchant power rates are maybe touching new highs given that demand for electricity is very high. I still think that you could get a target of maybe 60 to 65 rupees in the next 1 year if we get some sort of balance on the, you know, the coal transportation and the other issues. Sum of parts at this price, I think it has a good risk reward of reaching that 60 level in the next 1 year.
Okay, Mr. Satya Prakash is his name. He would be very happy to hear that. But let's get a technical view as well. Ashwini, your thoughts on Rel Power? Do you think he should stay put?
Power stocks in the best of times, you know, they get into one trouble or the other. Either it's the fuel issue or the NPA issue or the balance sheet issue. I mean, you got to keep away from that. I mean, look at how pizzas are selling. So the simpler the business, the better off you are.
Well, I take your point, but to be fair, today we had a detailed discussion with Mr. Praveer Sinha of Tata Power, and he believes coal prices are set to fall because it's internationally a hated commodity. Yeah. And if coal prices fall, then Indian power companies have something good going. And as Sanjeev said, power prices look like they will rise. So maybe raw material prices fall and product prices rise, there is some relief.
Well, Ashwini was talking about pizza. So let's, as we're ending the show, let's actually get down to that piece of news. These were the stocks that were buzzing around in trade because of earnings. Jubilant FoodWorks cooled off from record highs after reporting strong fourth quarter numbers. Same-store sales growth beat street estimates, came in at a strong 26.5%, and that's a 6-year high for the company. Manglam is here with the internal details of how the pizza stacked up.
If Jubilant FoodWorks' fourth quarter numbers are something to go by, the pizza party is truly well and on. If you take a look at the numbers, much ahead of our estimates, but the stock did cool off from the high point of the day, maybe owing to the fact that it was at record highs just as the numbers hit the wires. Total income growth of 27%. We were working with a number of 22.5% on the top line. The EBITDA, the company doubled, more than doubled their operating profit. 111% growth seen there. We were working with a number of 93%. And as a result of that, the net profits, that one grew by 915%. 68 crores is what the company posted on the bottom line, at least a 13-quarter high as far as the profits are concerned. Remember, it came on a low base. Q4 FY17 was the kitchen sinking quarter for the company. So watch out for the momentum going forward. That is something which is very important. The same store sales growth, a number that indicates how many more pizzas were consumed from the same store. That one came in at a 6-year high of 26.5%, higher than the most optimistic estimate on the street as well. They've rationalized their store opening as well as cut their loss-making Dunkin' Donuts stores. So 8 of them were shut in this quarter. Rent as a percent of sales also came by. All said and done, the big question, how much of it is baked in the pizza? Because for FY18, the company posted an EPS, earnings per share, of 30 rupees. Consensus expects the earnings to the earnings per share to touch 60 rupees in FY20. The stock trading at 43 times FY20 earnings. Let's see whether there are any re-ratings or not. The brokerages will tell us.
All right, from a pizza party to a soap opera, Godrej Consumer up close to 2% in trade after company's management lifted investor spirits with their guidance, but the numbers were not much to write home about. Listen to the management. Okay, we'll come to the management in a bit. Let's get Sanjeev to tell us very quickly what he would do with the Godrej Consumer stock. Sanjeev?
Well, Lata, I think consumption stocks are doing extremely well, and they have a lion's share of the market in Indonesia, where the margins seem to be, rising. And I think given the brand, given the reorganization of the entire Godrej group, whether it's Godrej Properties, it's Godrej Industries, or the parent Godrej Consumption, these are all very good conduits for buying on decline as we see the retail consumption part of the spending pick up. I think their brands are doing extremely well, and given that, like I said, they are getting more brands on the portfolio, I would be a buyer on any decline for this stock.
All right, Sanjeev, Ashwini, completely out of time. Thank you very much for joining us with all your answers to our viewers' questions. And with that, we wrap up this edition of Markets Today Talkback.
Thank you for watching. Have a good evening.